It's been a minute, but I'm so hyped to be back. We have a lot to talk about. I was gonna do like a big YouTube clickbaity hook, but instead I'm just gonna jump right in and throw a couple things towards all the listeners at home. We are going to be talking today about 6% mortgage rates, vacancies. We're going to talk about some interesting things in the banks and a really wild turn in the world of AI, among other things. To help me break through everything that's happened in the past 6 months, it's crazy that we haven't done a market update on this channel since then. Um, I have brought with me a good friend of mine, James Douglas. Just a little bit of an introduction. He is the founder of Calibrate Consulting. He is a consultant for Homey Business Home Services, a research analyst and statistician, and a real estate agent as well. So he's got quite a bit of experience in the topics we're going to cover today. James, welcome. Why don't you say hello and tell people who you are?
Thanks, Tyler, for the introduction. Yeah, I'm very passionate about real estate and specifically the Utah economic standing. I know different regions have different focuses and different economic appeals, but
Mhm.
love the research side of it, love real estate, love selling it, love especially with consulting and statistics. I do a lot of mini CFO work, I would say, as far as looking at spreadsheets and kind of the boring stuff that some people don't want to bother with, but I find a lot of strategy and insights just from looking at the numbers and then shaping the numbers and the KPIs to actually making informed decisions. That's the whole concept behind Calibrate, and that's why we call it Calibrate too. Is just you're calibrating your business, you're calibrating your life. You need a little bit of direction and focus, but I know we've had many conversations before, and excited to be here, Tyler.
Yeah, no, absolutely. And for full transparency, for people who look at my LinkedIn, I don't know how often that happens with people on the show. I do work on the side with Calibrate Consulting. Like I said, we've been friends for a while. We met in college, and James is a good guy. You're a really good guy. You really know your stuff. And I think it's funny, just the idea of like focused on Utah specifically. So we both live because I don't think people realize even obviously as you get further into your industry or further, especially if you're in the finance and investment industry, you start to understand this better. But I think the average person doesn't understand how different microeconomies can be compared to the nation itself. I mean, a really good example, my wife and I just went to Philadelphia to visit my brother-in-law. Um, and the whole time we were prepping for the trip, it was like stress mode because you were hearing all the news of, oh, the TSA doesn't have any funding. There's 4-hour lines at the airport. Utah was smooth as butter. It was the smoothest TSA experience I've ever had. And, talking to my father-in-law later about it was like, well, part of that funding comes from state taxes. That's who funds that. And so it really makes a difference. I mean, I think I remember hearing as well early in my undergrad that Utah wasn't hit as hard by 2008. There's some other factors. We weren't hit as hard by COVID. Um, you could argue on that second point, but state level economies are so different from the economy as a whole. And so I think it's an interesting perspective to understand that particular point.
They
Um,
and something to
Go ahead.
add too. They do a lot of groupings by metros even.
Mhm.
So you'll have like I know you have the tri-state area and kind of the middle of the United States, but there's even other metros where it's like the West Metro, East Metro, and I don't have them memorized by name and topic of which states and what counties are included, but it can sometimes be bigger than a single state or even just regions. Like they have like the Wasatch Front. That's
Right,
kind of a region,
right.
and it's different than a metro though, because different metros have different economies and urbanization to them.
Mhm.
So it's interesting in the research that I found that you almost want to test it more on metros and than you do counties sometimes. It just depends on your approach. But yeah, we'll
Right.
get into that a little bit more later, I'm sure. So
Well, I mean, and we can hop into that really quick as well because we're gonna jump in the first point that we're going to talk about today. Because I had sent you a text out. It's like, brother, we need to talk about Utah housing because I'm hearing a bunch of stuff. And again, for people at home, I haven't really talked about this. I've been in on a lot of private due diligence recently over the past 6 months, and Specifically, I'm on the ground floor. I'm doing the analysis with them. And one project I took on showed something that was very, very interesting that we texted about. We're going to talk about it here. But it's interesting to obviously demographics and available jobs, resources all play a different fit, play a difference in how a different area of even a metro behaves. So, like a really good example here is last week, I was doing a cash flow analysis on a quadplex for some investors that were looking to buy into it, looking at a potential option. And I did all the things that we as analysts are trained to do. I came up with my assumptions. I went through and I said, okay, what numbers are we going to use here? What costs matter? Let's build this model. Let's build the pro forma. And what I discovered, James, I was doing it by year because 360 rows on an Excel sheet is a lot to
It
handle.
is.
It's probably more accurate than what I was doing, but I was doing it by year. And the craziest thing that I discovered is after you paid all your necessary expenses, the new loan on this building, this quadplex, because it was 850K, was underwater from year one by like 30 grand a year.
That's quite
And
common.
I'm curious to hear about that because like when I was looking at it, for people who are at home watching this who aren't in the investment industry or in the real estate industry, insurance, is other industries that do this as well. But for my work, one of the first things that I do often after I figure out what all needs to go in my model, right? The first thing I go is I try to find revenue. How much money is it going to make? In this case, we're talking rents. And typically, what you do is you search the area around where that building is to determine what the rents should be. They're called comps. Very fairly simple. Hello, Keegan. I saw you join the live show. Welcome. If you have questions, put them in there and we'll be happy to cover them. James, rent in where I live in northern Utah, Davis County, just seems to have collapsed a little bit, which, as someone who is in the stage of life where that matters to me, I'm grateful that rents are down, but it makes those buildings impossible to. They're not an investment anymore. They're a zombie off rip. It doesn't even matter, you know. And so I'd be curious. You said that's common. Why don't you walk through that a little bit? Because I'm curious to hear
Yeah.
what you have to say. Because this is more your ballpark than mine, for sure.
So it depends on how to use. There's several ways to approach this, and I'm going to try to keep it very simple because it can become very biased or polarized as well. But if you look at just the general, and I'm going to be speaking about Utah specifically, I think there's different contexts and it could be very different if you're East Coast versus West Coast. But Utah specifically, if you look at we're just going to talk about geography for a second to kind of
Mhm.
give you some context before I start going into the details. But if you look at it, we're landlocked by mountains and a giant lake. So instantly, if you look at supply versus demand, you can see we have a limited stretch to work with, unlike some other states like Arizona or Texas that are rapidly expanding because it's flat. There's not, there may be hills, there may be mountains, but there's a little bit more space to kind of expand by. And you don't just have to go by length expansion, you can go by both width and length down the geography. But Utah, we have kind of this narrow strip of the I-15, and you have the west side and the east side, and you only have a few little bit of acres of land before you hit the mountain and the water. And then in different areas, obviously that goes out, that spreads
Right.
out. Eagle Mountain's a case of this. There's a lot of rapid expansion there because it's more flat, but it's on the
Right.
other side of the mountain. So part of what I am seeing is there is policy interventions.
Hmm.
And I just to give you context up behind my research, I did a game theory analysis, meaning where are the equilibriums and interventions of Utah's dynamics and markets. And it basically looks at how do politicians, homeowners, developers, realtors, you name it, everyone that's involved, what's their roles and what are the impacts of their actions in the economy.
Hmm.
And from what I found, basing it off as Nash's like the Nash equilibrium theory, it shows and this is all theorized, and it has, if you want more of my research, I'm happy to drop links, or I'm writing a discourse on it as well. So I'm happy to publish that soon. But it shows that a lot more of times it's political. There's
Right.
actually rent control policies, there's subsidy housing policies, but then it even goes more micro than that. You have it at a state level, right? Like a state of Utah level. But the problem is they'll pass a mandate for rent control or to expand units and growth of subsidy houses or even affordable housings with grants and different things. But then you also still have a localized government that can put restrictions on different permitting or different things. Or a fine example of this even was the governor's office in Utah passed a bill last year stating they want ADUs or accessible dwelling units, like basement apartments, to be more accessible. And they wanted every city to get on board with that and to make it more accessible because we needed more rentals, we needed more housing. And we have found cities, I'm not going to name names, but there are some cities that will charge 10 grand to get a permit. That creates some friction. That's political
Right.
friction now.
Right.
And that's pushback to even help with the solutions that the government is trying to establish. But then also, to kind of give you the long answer, we also see it in the communities. If you're a homeowner, you're sitting on your $1 million house that you've had since 1993 or 1970, you know your
Paid
house has gone
70
up in
cents
value.
and a stick of gum for, right?
Yeah, you're not gonna take a stick of gum for it. And even if
Right.
you bought it for 100,000, $200,000 at 12% interest, which back then that may seem like a high interest rate, but compared to the purchase price, that made it different. Affordability, that impacted the people differently in the market.
Mhm.
But nowadays, we're at 6.5% interest. You're buying that same asset for about $1 million. Not only is the homeowner being a friction point just because they want to make sure they get their market fair value out of it, they also restrict sometimes, like, you look at the social economic impacts as well. It's not even just financial impacts
Right.
of I live in a community and I don't want people to disturb my family, the park that I have, the the different things I love doing in my community, the views.
Right.
They're naturally going to restrict upzoning or different policy interventions.
Mhm.
And if you look at it too, the political dynamics, right? Like if I have a voice in my community, even not as a homeowner, I'm probably a renter, I'm probably in the workforce. I probably don't have time to go to the community meetings, probably not as involved in my community because I don't own. So the political power is even we see a political power restraint.
Mhm.
And then long story short, I know I went into kind of a whole synopsis of kind of the political dynamics, but
Mhm.
that actually affects supply and demand at a point because demand goes up because I want to live in the same community my parents grew up in, but my parents' house is $1 million. I
Right.
can't afford that as just out of college. And we even ran an analysis on a teacher salary. Do you want to take a guess what the average salary is for a
I
Utah
remember
just fresh graduate? What are they going to get paid?
I remembered looking at your deck. It was something like 53 grand or something along there. Some wasn't
53,
that
but we'll
pretty
round to
low?
$60,000.
Right.
And this is a single income to denote that.
Mhm.
The qualification, and I'm ballparking about a 7% interest rate for just example's sake. You probably barely qualify for 60 grand to $200,000. And that varies by HOAs, communities, and credit scores. I'm just generalizing if you have a
Yeah.
relatively good track record.
Right.
But then you look at that, you need double incomes, and even the gap between supply and demand and what is affordable. They say in about 2026, it's about a 6 times gap. So my income needs to be 6 times what it is to be able to qualify or afford what is the standard or the American dream of a single family home, 3 bedroom, 2 bath.
Right.
So those are crazy statistics.
No, yeah,
Then you
it
then you
absolutely
look at
was.
the last thing I'll say, sorry, Tyler, is
No, you're good.
that also spaces you out. If I can't afford to live in Salt Lake City or even Utah
Mhm.
County as a teacher, I'm gonna have to move farther out, which means I'm gonna have to commute, which that adds to traffic, that adds to other economic factors. So it's
Right.
the housing market is really affected by water, zoning, transportation. You'd be surprised. It's not always
Mhm.
supply and demand, but there's a lot of political restraints on it as well.
Yeah. Which, it's really interesting because it's funny that we're having this conversation right now because I kid you not, I was up till 2 a.m. last night. I was doing I was doing a industry sector portfolio on AI cooling, which we'll talk about in a second. But even that is affected. So we're gonna put a pin on that because I think we're gonna come back to that here in just a second. But
Yeah.
you know, And the value desk, hi, I saw you joined. Welcome to the live show. If you have questions, put them down in the comments. I'll be happy to answer them, or I'll divert them over to James if it's real estate, because I know probably a third of what he does. Um, one of the things we've been talking about a lot, right? And I, when it comes to like specifically like economic philosophy, I'm not quite sure closely we're aligned on this. I know one of the things, I'm pretty libertarian leaning, more free market leaning. Um, I don't like government being involved in anything. But one of the really interesting things that came up recently, and we talked about this, is the missing middle. So for people at home who are watching this, under previous eras, so we're talking World War II, we're talking Vietnam, before the explosion of suburbanization in this country, so it's the 50s, 60s, right? We had a lot of people building what's called middle density housing. That's your quadplexes, that's your triplexes, that's your brownstones in San Francisco, Chicago, Detroit, New York. These gorgeous homes, the row houses in Philadelphia. You can't build those anymore because of how the regulatory landscapes in these areas have developed. It's actually it's either outright illegal or it's economically impossible to build these units. Um,
There's a lot
which
of friction to build them because you oftentimes to add to that, I wouldn't say it's impossible. I would say the degree of difficulty is high
Mhm,
because, for example, if I'm living in your neighborhood and I have an acre of land, even though it's residential or even let's say it's commercial,
mhm,
regardless of what type it is, oftentimes to get the multi-density housing, you have to rezone it. Or there's even different types of residential zones.
right,
And each city mandates different rental permitting and different things because they're trying to keep crowd control down,
right,
the streets from being congested, and even trash and water and resources, right? It goes back to water and infrastructure. So if I'm a developer going to do that, I oftentimes have a friction process of just submitting my rezoning application, negotiating, getting denied, paying impact fees, and there's a lot that can go on. And then obviously that doesn't even denote actually supplies and labor
right,
costs. Those are like all entirely separate of even before
mhm,
I can start digging ground and getting sometimes the community can also weigh into that rezoning. If there's an HOA or even just a normal community, there are
right,
sometimes they don't allow subleasing or subdividing lots. And
mhm,
there's certain cities in Utah that are more difficult than others, but that's something to denote too is it will oftentimes push a developer out to go build somewhere else, and they'll go build something else because
right,
it's too hard. They lose money in the process.
yeah. It's funny because this is just coming back to my mind. One of the first private due diligence gigs I did, I was looking at building out what would it actually cost to take a large parcel of land, and this is not even in like an urban metro area, because that has its own problems, like you said, where sometimes it's not even worth it. This was out in the middle of nowhere, Utah, like an hour south of here. Even then, I was running the numbers and I was using AI to kind of talk through what I was thinking. I remember I looked up what percentage of costs can I pass through. So again, people watching at home, that's when it comes to like building out utilities, licensing, registration, rezoning, whatever. Um, how much of that can I pass on to actual units that I'm going to sell? Because in this case, it was a residential development, single family home idea. It's like, okay, how much of this can I put into the either the sales price of the land as it's developed to housing developers, housing contractors, or to the units themselves if we hire an in-house contractor and sell each unit. And it's like 25%. It may have even been less. And to put into perspective too, obviously I'm older than I look. I'm pushing 30 now. I've been looking at this stuff for a long time. I remember back when I was a sophomore in college, I was just home from my mission, bright-eyed, bushy-tailed. I'm gonna go take on the world. And one of the first things I thought about, because I'm always looking around, I've got the Steve Jobs mindset. It's like, how can we make this better? And down in Orem, now it's like Orem's just a town in Utah. It's where BYU and the other colleges are. There was this big building. It sat vacant for like a year. I think it's a pest control company now. but it's sat vacant forever. And so I was doing some research on like, why don't we turn this into apartments? Students need housing. They hadn't built a whole bunch of on-site housing for Utah Valley University where I was going at the time. I was like, we could totally do this. Build a whole bunch of studio apartments. There's like 40 rooms in the building. It's already got all the utilities. Just got to do a couple tweaks here. And when I got through with all my research, it was a 6-month, pretty much guaranteed wait time to even have a chance to sit down with Orem City Council to get it rezoned. And after that, chances are it would still get rejected. So just to support what James is saying here, this is not an easy process. And what it does is it ends up making the it it ends up making it almost impossible. Like you said, I guess that's a wrong word. You said difficult, not impossible. But why on earth, if you are someone like an Ivory Home developer or some other land developer, why are you going to go and try and build homes where they're needed near the cities in these areas when it's going to be a fortune to even break ground?
Something I'll point out too, Tyler, is going back to the game theory. The reason why I chose to model a game theory model specifically, I know
Mm,
it's not very common in real estate to do game theory, just because you're looking at more economics or forecasting than you are probabilities and impacts. But if you look at certain dynamics, there's certain things that weigh into everyone playing a game. You could call it, right? That's
mm,
why they call it game theory.
right.
But for example, you're mentioning developers. They've got to make a profit. They're not going to build unless it has a payoff or an ROI. Same with a homeowner. You're not going to buy the house if you don't think it's going to give you good equity. You can support your family. And don't get me wrong, it's multifaceted with as far as like security goes, an asset goes, equity and investment. It's similar to a stock market, but everyone has their own incentives and even cities do, which that was what was most eye opening to my research is just seeing, I won't name names, but I actually was consulting a municipality as well in Utah. It's one of the struggling municipalities with zoning and real estate economics.
Hmm.
And upon looking into some of their cases, I'm just going to generalize things as far as NDA privileges go, but a lot of what we researched and looked into, and you could say a lot of cities in Utah suffer for them as well. It's sometimes you have bully developers coming in where it becomes politicalized in a sense of, I'm going to build this. I'm your buddy. I know this guy in the city. He's going to hook me up. I like that guy. He likes me.
Right.
And we see sometimes there is some biases in these. I know each city's created differently and they do their best to manage and facilitate taxpayers' allocations of different things, but I think that's quite common as well. And it's different than redlining. For those of you who don't know what redlining is, it's essentially in the past, people would steer people away of color or race based off the community. They didn't want certain, obviously, that racism and those things are not okay when you're selling somebody a house. You can't
Right.
go to with the one person over the other person just because of their color of their skin or their family demographics or even their political agendas. So there's been extensive equal housing laws that have been passed, but I think it goes much deeper than even what the laws and RESPA allow for. Just from what I've been noticing is you can sometimes have political friction from the leaders having different biases or even the city I grew up in is Bluffdale. And for those of you who don't
Right.
know, it's by Draper. It used to be more farmland. Everyone wants to subdivide all those acre lots in Bluffdale, and there's quite a few left. There's premiums on them, and even the city officials are fighting back on, we don't want to subdivide those. And there's other city officials that do. So you see kind of a division among the people in the community at times,
Yeah.
which in my mind it really comes down to the community itself to facilitate what those changes are, because no matter how much I come from the top or even the Washington DC White House to pass out an order, a mandate or a grant, I think sometimes how those play out is very different in those metros and those zonings, and especially as we see in Utah. And I think my expertise is mainly in Utah,
Hmm.
but I'm sure the general principles of if I was to look at LA or New York, or even I've done some case studies in China, just because they've built some cities like Shenzhen City that's economically stable from day one till 20 years advanced. And
Yep.
that's generalizing, right? There's things to be said. There's downfalls of every city, but Shenzhen City is kind of a modeled case study just because they
Mhm.
built the infrastructure out. They built the roads, the streets, the gutters. They planned for the rentals, the population growth. And if you ask me, this is where I get really a bias in Utah. I have a really strong opinion, and I'm trying to be careful of that.
No,
But
share it.
from my opinion, I see Utah not hitting some standards that would just be the most fruitful for long-term longevity. It's very short-term centric in my mind. Of I'm going to build this for this duration of time, and then 5 years down the road, 10 years when we outgrow that, the permitting and budgeting is not there. So it's a lot more expensive than if you would have day one. Granted, there's constraints to that. You can't day one go build an 8-lane highway. You got to build. But my point is, let's buy up the land or know that you're going to build it into an 8-lane highway, even though you built the 3-lane highway. I
Right.
think there's a lot of that malfunctioning happening where the I-15 cannot carry the infrastructure of the density of people living in Eagle Mountain, which now that affects everyone.
Right.
Your traffic at
Right.
5 o'clock is going to be 3 times worse. And like I said, don't get me started on this topic. I won't shut up. But I
um,
do feel like there's a lot of levers that when one gets pulled, and if you ask me, government officials most times are not educated on the data and the statistics behind when you pull that policy lever, what happens.
yeah. No, yeah, absolutely. I mean, this is one of the things, really good book that I just finished, Investing in the History of the United States, Mark J. Higgins. One of the things that he makes very clear, and obviously when I say it, it's going to sound like a no duh statement, like, wow, really, Sherlock. Um, Bureaucrats and regulators do not understand the long-term consequences of their policy decisions. We see that over and over and over again. I wrote about it and wrote about it in the doorman fallacy article that I just did, where we covered that the metrics they used to track the war were like the worst possible metrics. And at the same time, you had the Great Society, which was a disaster, which not maybe, but supported by data and anecdotes, was the worst possible thing for minorities in this country in a long, long history, probably up till the war on drugs. Um, but again, it just goes back to what your point was, where it's short term. And I would say we have that issue across the country, not just here, but we definitely have it bad here, where people don't want the criticism I make is people want affordable housing, or they say they want affordable housing, but they don't want to make the decisions necessary to make purchasing a home possible for their own children, much less everybody else. Um, I I actually just with that case study I shared where I was doing that analysis, um, his name's Tanner Litchfield, another real estate guy here in Utah. He commented on one of Graham Stephan's posts. Graham Stephan, major realtor out of California, sells multi-million and $100 million homes to rappers, basketball players, you name it, right? That was his whole career. Has this large real estate portfolio in California, or did until this year. He's selling all of it because what you just described, after everything, all of the nonsense that he has to go through in California to rezone his properties, make them ADA compliant, turn them into, because one thing he really wanted to do was create low income housing with some of his units. After all of the debacle and nonsense he had to go through, he realized he makes about 5% a year return on those investments with the largest possible political risk that you can possibly get outside of maybe oil or military contracting, healthcare. There's very few other industries that have a higher level of political risk than real estate. And he came to the realization, he's like, I can go and get a corporate bond at what is it, 5.5, almost 6% return with no risk. And he basically came to the conclusion why the hell do I own real estate in California anymore? So we're seeing that breakdown in real time. And, I have my own opinions on Shenzhen and Beijing, other areas in China. But one of the things that, in terms of how they went about financing that growth, seems to be where the issues have. But one of the things that they seem to do really well, and we kind of have to compliment them for it, as horrible as it is they built basically the equivalent of an in-network, out-network system like we have with healthcare for their housing. So with the hukou system that they have, it kind of controls the flow a little bit better of people moving into these cities, because if you're a migrant laborer coming from the outlying provinces, you can't get access to certain services in Shenzhen even if you work there because of the hukou. But anyway, that's besides the point. Um, One thing that I wanted to bring up, just because I saw this the other day, and I'm curious to hear your opinions. One thing that I noticed, two stories, is that it seems like people are waking up to this problem in this country. It's been a painful decade for real estate development, as far as I could tell. Yeah, there were a couple really good years after COVID, but listening to people like the Meritage Home CEO and talk about how difficult it is for them to, even for the public companies, to maintain enough growth to get investor money. Um, it seems like now people are starting to wake up to it. We hear stories about Texas that's doing more middle density housing. Colliers here in Utah wants to level a whole section of the inner city that's basically rotting, because for people at home, that, in my mind, that's the ultimate result. I drove out of Philadelphia and I saw the row houses that were left behind because they became too expensive or too risky to refinance. And that's how you get ghettos outside of major cities. That's how you get these areas that just rot, because no one, it's impossible to refinance those buildings. It's impossible to rebuild them because of the costs. And that's where we're going to go too. Where Utah's not special. We're just ahead of the curve, in my mind. But it seems like people are starting to wake up. We have more townhomes being built here. Like you said, that there are people on the hill in Salt Lake City that want more apartment units being built. Are you seeing more of that in the real estate sector here, where people are looking at more of doing more of this middle density,
Yes and
bringing that
no.
back? Okay.
Something to denote is, so when it comes to the middle that we keep mentioning, obviously to it's hard to build those margins for developers. They don't make as good of a margin as they do a luxury home or a higher density or an apartment complex.
Hmm.
So there does need to be some incentivization there for their profits, or even there's talks of different programs to kind of subsidize some of these costs.
Right.
Or even like I know the Utah Housing Grant did one this last year. They're about, from my understanding, they're about out of giving those grants out. But if you bought a new construction home under $415,000, you qualified for a $20,000 grant. That basically, there is some
I
contingencies on it,
remember
which
that.
I won't go to, but they they obviously were trying to incentivize people buying new construction in that market.
Mm.
What I'm finding is, and this is where I need to be very careful how I word it. I feel like even in economics, you can get really like political with it. You can be like, it was this, and it's he say, she say, honestly, on a lot of it. So,
Mm.
but from what my research is showing me, and part of it too is I had an experience as a realtor where selling in a Utah market, especially the last few years, right? Like I started selling after COVID. That was a hot market. In the beginning of COVID, no one wanted to buy, no one wanted to move. We were all just kind of like, what's going on? Bunker down for a second, we'll ride this out. And then we're like, this is not blowing over as fast as we thought. Let's continue life with masks. And that actually
Right.
affected the Fed and lowering a lot of, first, they lower different funds and federal reserves that then slowly trickle into housing. Like it lowers government loans for student loans, cars, other things before it actually hits homes and equity. But they eventually got lowered to about 2.8%. or I'm paraphrasing. I could be off on the
Yeah.
number there, but
I think it's
what
pretty close to that.
what you're gonna see from that though, and this is from like the statistical impacts I've measured, even helping clients get into those homes, it was a hot bidding market. Everyone was overbidding by $30,000, $40,000, and sellers were profiting at the time. Obviously, they were making a killing. But
Right.
what it's
Right.
done is it's locked. If you look at it, if I was one of those clients, like even talking to my clients that bought at that time, I go back and talk to them if they ever want to sell. Even the national statistic is 7 years that someone is likely to sell their home or move or upgrade or even turn it into a rental. I think we're going to see a lot of change in that statistic from that market just because if I'm sitting on a 3% interest rate, my monthly payment, I'm just going to paraphrase, is $1,600 a month. To buy the same house now, your monthly payment would be $3,300 a month. Even to upgrade my house, I'm going to take a giant loss and jump in my monthly payment. So it kind of also traps you in the market where you're like, I'm never going to sell until I
Right.
can pay off my house or till I actually really, really, really need to.
Right.
So the demand goes down in that sense of I don't feel like I need to sell my house. But then also I'm seeing another dynamic where you see it after 2021. Now we hit 2023, 2022 era. We see a peak of interest rates hitting about 7%. I think at a peak it was 7.3. I'm again roughly estimating. I don't have it pulled up here. Um, so that same house that's $1,600,000 for a monthly payment is now almost 36, 38. I'm estimating again, right? Ballparking.
Right.
Just to kind of paint a mental picture of pain, because that's the American pocketbook pain. But then what's difficult is I see a very big distinction between the middle class and the builders and the pre-existing, because pre-existing can still be a solution, right? Like if I own a decent sized home, a 3-bed, 2-bath in a nice area, and I can sell it to the next family trying to enter into home affordability.
Right.
But the problem is I have to sell it at market rate and the market value. So
Right.
that home is now medianed around the Salt Lake. The whole Utah average is around 543,000 for like a median sold home. But that affordability, granted, if I'm a teacher, going back to that analogy, I can't afford that.
Right.
So you do have to find these programs to help you. And this is where I think Utah and no one is talking about this, but I want to be like some of the first people bringing awareness to this because all my statistics are pointing me to the fact that with this giant gap, right? We have the 3 percenters and the 7 percenters. They have very different economic statuses, monthly payments. Don't get me wrong, we're both surviving, right?
Right.
But
But
you're
most of
also
those
going to
7%ers are house poor.
they're house poor.
Let,
But
let's
then
let's
also
read
you're
the
going to
room as it
see
is.
in the market there's band-aid effects, right? The grants, the let's build more apartments, let's build more, let's rezone everything. Those are band-aids. We're not actually fixing the supply and demand. Or if you ask me what fixes the supply and demand, it's getting people that work in their community to stay in their community because they will naturally take care of it better. They
Right.
will care about their community. They will advocate for the wealth and prosperity of that community in bountiful ways beyond just finances, social
Right.
economics, you name it. But the issue is now to go back to the band-aids. This is a big band-aid effect that I don't think people are talking about.
Mhm.
In my professional opinion, when, for example, I bought a home last year
Mm.
and it was hard. And I will point out too, like, I've been very blessed. I'm very faith driven. I've worked very hard. And I think I'm grateful for all the opportunities that came my way to where I could do that.
Right.
And it was a stretch, it was hard. And something people don't talk about is you actually have to, I'm about 25 myself. When you are about 25 trying to buy your first home, or it's different if you're married. I'm going to underlie that as well. You have to sacrifice. Like I had to sacrifice by living at my parents' as a 23-year-old going to college and working and consulting in real estate, swallowing my pride to say I live with mom and dad again, to be able to save my pennies to buy and make a down payment on this house. But something else I'll point out is I also had some help because I was in the industry. I got a call from a builder, and this is something I wanted to note. Builders are doing a lot of things to help the market, but I think in the long term, it's going to hurt the market. This builder called me out of the blue. I won't name names, but they called me and they said, "Hey, do you have an investor that's ready to pull a trigger? We had someone back out of a financing deal because they couldn't qualify. For us to hold on to this unit, it costs us more money than to sell it at a loss on certain things. To incentivize this investor, we're going to pay," and I ran the math. They didn't tell me this. They said, "We're going to give you a 7-year, like 3.78% interest rate." So that's an arm where
Right.
my monthly payment that should be $3,600 is now $2,200
Right.
for 7 years.
Right.
That costs the builder probably around, again, I'm grouping it, $60,000 to pay for that in just financing concessions alone. And it's almost like coupons. I call it coupons. You go
Right.
to Walmart, you slap your coupon on it to get a discount.
Right.
But that also, if you look at it, that undermines the pre-existing market. If I was to buy the same exact house I bought in the pre-existing market, my monthly payment is $3,600 plus I don't have closing costs. I even got closing costs. I got 10 grand from the builder as well. That's another 10 grand.
Right.
I willed and dealed them because I'm a realtor and I got even more stuff. They probably gave me, I'm paraphrasing, $80,000 in add-ons, concessions, buy downs. As a pre-existing seller, can I give you $80,000 of my equity to the first willing able buyer?
No.
No.
No. Probably not.
But that, in a way, that kind of erodes some of the basic supply and
Mhm.
demand factors that you're going to see these spikes in difficulty. You're going to
Right.
see people being pushed out of communities. If you're not buying new construction, you're going to see
Mhm.
downfalls in 20 years. Or even I've had clients call me. I had a client call me on Christmas Eve last year because they were upset when I explained to them 3 years back that they had bought an adjustable mortgage rate. And I, of course, as a good agent, I was going, you need to be aware that your mortgage rate is going to jump up by 1% every year until it hits the market value of 7%. Do you still want to move forward with this purchase? I can buy it down at not out of your cost. It wasn't coming out of your wallet. I negotiated for somebody else to pay for your interest rate to go down.
Right.
But then the second and third year came along and they were upset, and I was like, let me re-explain this to you. You're
Right.
living in an economy that you do have to buy arms to get into homes. You do have to get these bandit effects, but it hurts them.
Right.
And even this client, I felt like I had done a good. They even signed a dotted line saying they understood everything. I showed them their term sheet. They even signed a mortgage statement saying in 3 years this is what their payment is. Year 1 this is what their payment is. I just think that Utah is a little naive to what the impacts are going to be because the builders are just competitively trying to sell. So they're
Mhm.
doing these giveaways and coupons that you can call them to concessionize affordability or to help middle
Right.
class get into, even for me. Don't get me wrong, I'm very grateful. That made it
Mhm.
very affordable for me. Like I'm paying $2,200 roughly in that ballpark for my monthly mortgage compared to the entry point of 3,600. I could not afford the 3,600 with just my own level of comfort. And but you can see that that just creates friction in the market, and
Right.
it kind of creates, it pushes certain people out of markets where I'm, even if I am a builder, I can't build like a commercial builder in Utah.
Yeah.
I can't give out concessions like they're going out crazy, right? So I think we do need to be watchful of what these concessions are doing and these adjustable mortgage rates. That's been said for decades now, but I think Utah's really in a adjustable mortgage rate environment with buy downs, or you can get permanent ones as well, but there's a lot to get lost in. But I think that does really affect the middle class because it may not be year 1. Like I said, that client that called me on Christmas Eve upset, they called me year 2 or 3 going, "What the crap, James? My mortgage went up." I don't remember that conversation. I'm like, "You That's
You
on you,
signed
bud.
it.
You signed it. I explained it. I'm here
Yeah.
to help you. I can offer solutions still, but you knew no willing when you bought this house. I told you that your
Yeah.
monthly payment was gonna go up, and you wanted to bet on the market. It's the same thing as stocks. You buy something, you sell it because you believe in it.
Right.
I'm literally telling clients these days, how confident are you in this market? Because I will not push this. I will not push an arm with you if you're not comfortable with that level of risk. And this client 3 years back did say they were comfortable with that level of risk. Granted, something changed in their economic well-being, but that's just the difficulty I am seeing. And even that doesn't make me very happy as a realtor because I'm not just in it to sell them a house and collect my paycheck and leave. I
Right.
want to build a relationship with that client. And even that client has been really upset with just their own economic well-being, and they do sometimes we take it out on other people. So, like,
Yeah.
I'm able to own and separate myself from that situation, but it's hard seeing a client go through that, and I'm like, "I feel your pain. Yeah, it's hard. Yeah. Yes, your mortgage just went up." But at the same time, like, take some ownership, Utah, and getting educated to know what that means, and
Mm.
I'm very confident in my ability to tell my clients that in the past. So that's a shame on the client at that point because I had gone way thorough. I'm probably way more thorough on the statistics and numbers than I'm not very touchy-feely or, "Look at this nice countertop." I'm like, "This is the pros, these are the cons. This
Right.
is just black and white. Can you accept it? Can you get this level of risk?" It's buying a house is a risk. Getting a mortgage is a risk if you don't feel like you have the income or long-term stability. But anyway, that was a long rant.
No, you're
But
good.
long story short, the middle class is gonna suffer from concessions that were
Mm.
temporary fixes, but are gonna be long-term detriments. They're also suffering from getting pushed out of communities by builders. It is helpful to extents, but it makes it hard to sell pre-existing real estate and to compete,
Yeah.
especially there's certain markets as a realtor I've seen that are more struggling than others just because of how much builders are involved in those communities. So,
Right.
if you ask me to fix the middle class problem, it really is everyone getting on board. Homeowners, developers, builders. It's like we can't undermine our other friends or other people, and also in the same point, you gotta make a profit. It can't
Yep.
just be all socialistic in nature either, which
Right.
I don't think people understand either.
Right. Well,
Someone's gotta
because
pay the bill.
and first I want to say welcome, Shah Hasuvia and Stock Market Intertrade. Welcome to the show. If you guys have questions, put them in the comments section. We'll answer them. Um, that was going to be my counterpoint to China because you know a lot about real estate. China's my ballpark.
They're very
The
communistic.
people,
Yeah, it's very
the
socialistic where it's you can't have that and your neighbor can't. We all gotta have
well,
a
well,
certain
no,
level of living and criteria.
this is the dirty secret that people do not realize about the Chinese real estate market. And I'm not an expert by any means. I'm not working for Bloomberg, but one of the things I've learned over 2-ish years of studying this pretty in depth is the person paying the extra bill that was subsidizing that housing was the Chinese government. So all the big Chinese developers, we're talking Evergrande, we're talking China Vanka, all of them are government owned or government sponsored entities. And because of that, they got really good deals because the government came in and basically said, we'll make sure that these houses continue to go up in value. And
Can
it's
I argue something as well?
go for it.
So,
Go.
on the contrary as well, even in the United States, that is very, very factual. Like, even in my research of Shenzhen, that is what I'm finding. The government was fronting the bill or granting the general access for the public. In the state of Utah or even these other states in the United States, there still is a buy-in from the government.
Mhm.
Like, even in the community I live in, the government was the one who put the streets in. So,
Right.
I would say the government's buy-in from we're gonna speak generalized right now, is more often transportation. You need to be
Right.
able to provide accessibility to
Right.
workplace environments with transportation,
Mhm.
freeways, transit. I think Utah has a different problem because if you ask, if we were to do a survey, I don't even need to pull the data or look this up. If I was the make an assumption here and got on a whim, if I was to ask the general public in Utah, do you want to ride public transportation based off your industry and based off what you do? Granted, there is a population that does.
Right.
I think you would find
Most
the
people.
majority still saying, I want to drive, I want to live on my own house with my
Yes.
own garage, with my own car. with my own yard for my dog and my kids to run in. And
Right.
it's very different, right? China's very they have different needs, different economic
Yeah.
statuses of family and culture.
No,
So I think
100%.
those cultural factors, you'd be surprised, play into it more than we think.
Oh, no, they absolutely do, 100%. I mean, just to jump on them, we there's another topic we wanna cover in this, so we'll get moving over there here in a minute. Just to put into perspective for people watching this, one of the reasons why people like Evergrande, Vanca, the reason why they can't sell these units anymore is because the way that Chinese culture looks at apartments and looks at buildings, looks at housing specifically, is there's a specific spirit to the housing that doesn't really cover it's that's a really bad explanation of it. But it's very much like a feng shui, but it's real. People won't go into homes that the spirit that they're looking for doesn't reside in, that the vibe isn't right, right? So you have a whole generation of people in one family owning one apartment that none of them live in. They all just invest in it like a 401k. Um, but on top of that, the government built all these bailout loans and pr- protected these big developers to the point where they were zombies. Um, but it's also that's not abnormal here too. I want to go back to the buy down thing. Something that's happening all over the country in many industries, not just real estate, is you're seeing people start to play more creative financing games is the best way to describe it. We saw these in 2008, 2001. These are not new games, right? But it's doing things, for example, like rewriting the rules of what something is, describing it in a different way so it fits in a different category. Or in the case of real estate that I saw with the bigger apartment complexes, why rent was so high for so long, is their valuation is based on rents. And so if they bring rents down, the building's worth less and they can't get as much funding for it. Stock price goes down, etc. So they started playing games like offering people 6, 7, 8, 9 months of free rent because on paper it did the same thing. Well, in reality, it did the same thing. It lowered rents. But on paper, it looks like no, we're still charging $1,700 for this apartment in downtown Salt Lake. So it doesn't look like they're losing money. Um, Is it okay, James? Can we hop over to AI really quick?
Yeah.
Because it's something you and I we go on and on about, and we have some very big news that I wanted to cover. This one's probably more common. More people probably know about this than about the Utah housing situation. Guys, if you want to learn more about it, go follow James on LinkedIn. Go reach out to him. Read this prospectus. I don't know where you're going to put this prospectus, but when it comes out, go read it. It's really fascinating stuff. He knows his
It's
stuff.
gonna be a publication, so I'll just
Okay.
be like same as any scholarly source, or it will have some, other PhDs on the paper as well. I'm not a PhD yet, but I'm still finishing my undergrad, but I'm partnered with a lot of researchers, and we're gonna
Okay.
publish that at a university level, so,
Sounds
yeah,
good.
go let me know if you have questions, or I'm happy to always share. I do stuff around Utah as well with presenting at other conferences or things, so
Okay. Look it up, guys. With that, we're going to switch over to AI because we had two bombshells drop in the course of like a month and a half. I didn't cover it because it's been a crazy month for me, so I apologize to regular readers. I've tried to be really on top of the pulse of AI, partially because I am so critical of their valuations, but also because I actually see this as we've crossed the Rubicon. Like I told Jeffrey Glussman months ago, there's no going back after this. And so the question is, do the numbers make sense? And that's where we're at. This is what I wanted to cover, James. I wanted to cover two things, and I put it in this little outline that I sent you. But the first one, oh, we didn't even talk about bank earnings. I will talk about that. Everyone who's watching at home, I will cover that on another show. We're going to talk about banks because there's big news there as well for the health of the economy. Um, AI in 2026, right at the start, we got some big news from the two heavyweight giants of the AI industry, OpenAI and Anthropic. Both of them are planning to go public this year. And I'm trying to remember, I have the valuations right here. So let me see if I can grab those numbers really quick. Um, it's some insane numbers.
Something
The
too. This is a question for you, Tyler. This is
Go
just
for
one
it.
thought on it. Do you think that the government contracts in AI are playing into the valuations? Because I know, for example, OpenAI is the only one currently engaged with the Pentagon,
Mhm.
and Anthropic has actually been criticized by the Pentagon and because they wanted to do different lethal things with their software and cloud code and different things, and that was
Right.
against their own ethics and violations of terms.
Yes.
So they parted ways, but the government obviously kind of chastised them.
Mhm.
I don't know if that plays into the valuation there. That would be a
So
general question I have.
we're gonna get into this because I have strong feelings about this.
I do too, and I'm trying to
Again,
not get so polarized. I know it's
um,
we all once you start using something and you like something, you have an opinion on it. So
yeah.
full discretion
So
there.
for everyone watching at home, I'll say this again in the description here. This is not investment advice. Obviously, before you choose to make any investment decisions, whether it's a stock, bond, doesn't matter, or in this case, an IPO stock, which we're going to talk about, please, please, please consult a licensed advisor so that you don't do something that you're going to regret. Obviously, these are very risky decisions. Right now, to overview it for everyone watching at home, Anthropic and OpenAI are both bidding. They're in talks with investment banks this year to go public on the U.S. stock market. Um, Anthropic is looking to IPO at a valuation of 800 billion, and OpenAI, in a crazy turn of events, even though they only have a current valuation of 852 billion, they're looking to get 1.2 trillion dollars at IPO.
Holy
That's
crap.
the situation we're at. Does anyone else smell a down round here? um,
Don't even get me started.
so I ran some numbers while we were talking because I think it's worthwhile to bring this up. Um, if we look at Anthropic first, they want a valuation of 800 billion. Right now, their revenue run rate's around 30 billion. So we're talking 27x revenue multiple here when they IPO. EBITDA, we don't know for sure. These are private companies. We don't really have a solid grasp on what their different multiples look like. I can tell you this is high. I was listening to Wall Street Prep talk about this the other day on their What's the Big Deal show. I think they said the only higher IPO price in terms of multiple in the SaaS space in US history was Salesforce. I think it was Salesforce and Cisco were the only other ones that had a higher IPO price. I could have that wrong. Do not quote me on that. But in terms of multiple, OpenAI, on the other hand, is about 7x higher at a 34x revenue multiple at IPO. They only do
Interesting.
about $25 billion in revenue run rate right now per month. So, or annually, sorry. So that's where we're at. Um, I think this is a big deal. One, because this is the largest IPO we've seen aside from SpaceX in probably market history. You know, right now there are only two companies who have pushed past the T when it comes to valuations or valuations they want, and that is OpenAI and SpaceX. They're the only ones in the entire market that have done that. Obviously, there's plenty of companies in the market now that are worth more than that, but if you came to me 3 years ago and said, "Hey, this company wants to IPO at $1 trillion," I would have thought you were crazy. And yet here we are with two. Um, in my opinion, this is kind of absurd. With Anthropic, it's a little closer. I'm giving them a little bit more grace because I think that they're at their last seed round, they were or series round, sorry. They were valued at 600 billion. I think it's a lot more reasonable that they'll get a 200 billion bump from the investment bankers rather than a 400 billion bump that OpenAI is looking for. Um, but both of them are a little absurd because these are huge multiples. I think what's going on here, and I could be wrong, is we're seeing kind of the end point, or at least the maturity of the AI spending glut that we've seen since basically 2000, since 2023. Um, for people watching, this is one thing that wasn't really covered in the news cycle because it's much harder to track. Obviously, after COVID, people were stuffed with cash from PPE loans, from the stimmy checks, whatever. It doesn't matter. There were just tons of cash in the system. Eventually, that gets back to business owners. That gets back to wealthy individuals who own those businesses, and that money has to go somewhere. You talked about this already, James, where in that situation, equities and other things often show up last. That's what we experienced. After inflation kind of ran its course in 2023, a lot of that money ended up in the hands of VCs and private equity firms. Private equity is a whole different issue that we're not going to cover today. But a lot of money went to venture capital firms. In a time where there were very few new startups, it was a handful of AI startups. So most of them went to like 4 or 5 companies, OpenAI and Anthropic being one of them. I believe that's losing steam. I don't think AI is going to stop. I put that in my profile that I did the other night. AI demand is going to keep going, but we're seeing the build out start to lose steam. And actually, what this is the other big thing that I was going to tell you, James. One of the reasons why I think that's the case is in OpenAI's last funding round. So they raised a funding round in like February. It hasn't been that long since OpenAI last raised money, which is why I assume that they're thinking they're going to get a higher valuation because they just got that 800 billion valuation not that long ago. This one came with a catch. Um, if you look at the details of their last series round, which I think was like a series D, series G, it's a pretty high number. It was a struggle. For about a month or so, people like Nvidia were waffling back and forth. SoftBank was waffling back and forth. They couldn't get the money from investors, so they were trying to go out and syndicate it. They were trying to bring other companies in, other banks, and eventually they gathered 122 billion total around there from SoftBank, Amazon, and Nvidia to invest in this next round. That's a big leap to what they had previously. That's how they got to this valuation of 852 billion. But it came with a catch. Part of the deal that is the only reason, as far as I can tell, why Amazon put forth the capital that they did to OpenAI uh, is their ultimatum was, we will give you this money, but you have to have AGI. That was the ultimatum that they received. They said, Sam, if you want our money, you need to show us serious proof that artificial general intelligence is right around the corner because you've been saying it for 3 damn years and it hasn't shown up. I think when you combine that with the idea that OpenAI is trying to own the infrastructure layer of AI, they're trying to own all the data centers, all the cooling, all that. I think, at least for the OpenAI situation, they're pushing for such a high multiple because they need the cash to actually have a chance at survival. Which is sad to say. I mean, obviously they're making, you know, 25 billion 25 billion a year in revenue. That's nothing to sneeze at. But when you're spending at the level that they're spending at, people forgot that back in February, Sam Altman said, if we don't get another round, we're going to have to close our doors.
I think there's something to be said about that too, though. I think if you look at it, right, like a good analogy for this is if food. I think we all think with our stomachs sometimes. If you saw an Indian Mexican restaurant, what would be your first thought?
Indian Mexican.
Yeah, you'd be like, "What? Am I getting Mexican or am I getting Indian?" Does
Right.
that My first thought is, if I'm gonna eat Indian, I wanna go to the Indian place. If I
Right.
wanna eat Mexican, I wanna go to the little hole in the wall that has the actual necessity foods. Do you know what I mean? Like, that they know
For
how to
sure.
cook.
For sure.
But I think people sometimes dilute the market by trying to do too much, right? Like, in some fields, it works. Don't get me wrong, like, home services is a prime example of it can work. You get an HVAC, plumbing, one stop to choke, whatever you call it, you know what I mean?
Right.
But I think in AI, and this is my opinion here, I feel that OpenAI has diluted themselves in a sense because they haven't really tried to specialize. It's just been like
No.
the first to market AI. We are the
Right.
first search engine that props up a personalized result. That's that's the claim to fame with OpenAI compared to, as of late, like, a little bit of context, I actually used to use OpenAI religiously. I really liked Don't get me wrong, their chat features are still far superior. Like, if I'm driving in my car, OpenAI's model is so much easier to talk to and it doesn't interrupt me, or Gemini's is clumsy if I'm trying to talk to it. But they've over the past few years, I've been using it for several years. I've actually started to adopt Claude Code for building artifacts or HTMLs or markdown files just because it produces a better result. Or even it's more advanced modeling on the
Right.
coding and the JSON files that it pops out. I'm like, wow, this is 20 times better. And it was the first to adopt connecting to GitHub. I know ChatGPT can do that now. And don't get me wrong, ChatGPT has done similar things where it's like, okay, that was a good artifact. That was a good HTML thing or whatever that I've built with it. But the issue I'm finding, like, if you asked me and held a gun to my head and said, what does Claude do? I could say code, one word. If you held it to
100%.
my head, Gemini, research.
Yeah.
Connecting to data, they are just the monster of Google. Same with Copilot. Copilot, I'm a little biased towards. I think their model is good at making automations in Microsoft if you're connected to the 365 suite.
Mm.
But beyond that, I haven't really pushed it to its limits because it's hallucinated a lot, or I've had issues with it. And that's keep in mind, I will use discretion here. Everyone has different use cases. I am
Mm.
using it in real estate for consulting for research. I'm gonna be biased. I'm gonna wanna use Grok and Perplexity and Gemini
Mm.
over OpenAI because OpenAI is the pushover. I call it the pushover client that's just like, "I'll tell you what you wanna hear, daddy." Like, that's a funny joke, but you get what I'm saying? Like, that's
Yeah.
how ChatGPT, OpenAI has felt to me, where it's like Claude has felt like it's challenged me. It's Gemini has felt like it's pushed me. Like, you pair Gemini with Google Scholar and that is my research bread and butter. I don't have to spend all this time looking through my old undergrad library trying to find a scholarly article and getting the codes just right to filter it just right. I can go to Gemini, write me a prompt to put in Google Scholar to then find the thing that I have access to. You can even tell it, filter it to this library that I actually have access to. That's
Right.
how I do research now. And then you pair that with Claude, and then I'll marry it to Claude going, "Okay, this is my notebook LM. Can you connect to it? I'll download
Right.
everything to my computer and have a file database for you. Can you just pull from these main things? And this is your branding you need to follow." Like, I had to do a real estate gala presentation, even with extensive game theory research, where I was told to take my presentation that I could talk on for 6 hours and make it 7 minutes. That's hard.
Yeah.
But I plugged in my Notebook LM, my Gemini to my Claude, and it just was a coherent gate
Mhm.
to just produce an outcome that was stunning. You wouldn't even think if I showed you that it was produced from AI. But where I'm getting on a tangent here, what I'm trying to say is the value.
Right.
As a professional working in the consulting and real estate space, the perceived value that I feel from that valuation to Claude would be more warranted. Even Google. I know Google's not on the table, they're already public, but they built Gemini. They built Notebook LM that they even gave away for a year for free to students. That
Right.
is a huge value. I
Yeah.
feel like, in my opinion, OpenAI is behind on those value adds. They gave out an open credit of like you can get more usage, $100 credit, only after the fact that Claude Code had already released their $200 credit.
Right.
They are, in my opinion, they are not innovating into a very direct niche. They're trying to be everything and everyone. They want to do agents, they want to do images, they want
Right.
to do it's the same thing. Like there's like so many of these niche AI companies that could probably be evaluated very high,
Hmm.
but focus on what you're good at. Be a gamma that just presentations. Be an otter, just audio recording into transcripts that sends to your email and it files it perfectly for you. OpenAI, if you ask me, is going to undermine themselves in their own valuation by how they are currently acting in the market,
Hmm.
and they're losing the market they had. Like they lost my subscription. I was like, I don't even see the point in paying for it anymore.
Yeah.
I found so much more derived value in other. And don't get me wrong, it feels like I turned that subscription off and went to another platform instantly.
Right.
I'm trying to stay keep up on staying relevant and learning what's going on in tech and even what I'm paying to because that's your voice even, right? Your income that you give to that company, that revenue is your vote in a sense. So, anyway, I digressed, but
No, and I 100% agreed. And we had this conversation just to put to that point, and you and I are aligned on this. Um, Full transparency, I am very critical of these valuations. I think Anthropic has deserved it a little bit more, because they are going to be the developer at this point. They will be the company that will make dark shops possible at scale, which that is insanely valuable because it makes building software. I work in the software space, especially the custom in-house solutions, so much faster. We had an architect come to us at BA and tell us, hey, if I had known what I'd known about AI agents 6 months ago, I would have built your app for you and it would have been done. And we wouldn't have spent as much as we've spent on our app. So I think their valuation is a little bit more deserved. I have to actually look at the numbers to see if it's worth what it's worth. And
there
it
might be a different
gets
way they're evaluating it too. I know especially at a venture unicorn level,
mm,
it can get kind of high up where it's like, hey, you need recurring revenue multiples, you need
yeah.
assets, you need company, you need a jockey. They weigh the team. I think
Mhm.
there is a lot of politics even that go into the valuation that I'm curious if you have more reports on it, Tyler, or you're willing to publish something on your LinkedIn or that we
Um,
can go back to and use as a reference of how they did their valuations.
I will be looking into it in the next couple weeks. That's a promise to the people here on the show. The two issues that I've run into consistently as I've been watching this is one, comps. So, when we were in our VC class, as I graduated, so that was one of the first places we met was actually doing venture capital work
Capital
in a
class, yeah.
class. Um, what are the comps for an AI coding platform?
There's not a lot. It's kind
You know,
of the first and it's but that's the hard thing too
right?
is like then you gotta go back to the basics. You're like
You have to
comparing
break it
that to a
apart.
coding consulting agency
Yeah.
that now you've taken the time, the thresholds, like it does add a dollar to it because time and
Mhm.
speed and value and
No, for
outcome,
sure.
that's what you value things on
Uh,
from the get-go, right? Like, what is the customer willing to pay? That
yeah.
I think that is the greatest validation in itself, which they've don't get me wrong, all these AI companies have that, but I think it is hard to say, like you're saying, like, how do you evaluate such a niche
Right.
aspect of such a
And
newer it's only a decade old, if that. I'm sure
yeah.
it's been a decade old just with development and the technology behind
Mhm.
it, but the public just knew about it in 2023,
Right.
2022 ish.
And there are, sorry to cut you off. There are
Yeah.
some ways to get around that. I mean, again, Wall Street Prep was talking about this when this first broke. You can break those companies apart, look at comps from those that cover just that part of the company, um, and then use some weighting and some assumptions to build a valuation. So you can do that. It's a little bit more difficult. It's even more difficult for OpenAI because no one knows what the hell they're trying to do. Like you said, if I go down the list of, and I'm not an AI denier. I am critical, but I'm not an AI denier in any sense. I use it every day. If I go down the list of everything that VCs and CEOs have brought up for why we need AI today, I can basically, as a reflex, tell you what tool I'm going to use and what tool is best fit for that. So, like you said, AI search engine, Perplexity, easy. Research, Gemini. Defense, Scale AI. Defense Llama, easy, right? Coding, Claude, done. Um, if you're looking at video production, Opus, comes to mind. VO3, again, Google comes to mind. So there's tools that immediately jump out as like, oh yeah, that's what this thing does. Easy, done, we move on, right? And then you have OpenAI, who's like, they have ChatGPT, which is like a chatbot, but kind of like a browser and does some research sometimes, is good for some things if you train it right. Then they had Sora, but then they got rid of Sora, and I think they own Stable Diffusion, right? I'm pretty sure. So that they have Stable
Maybe I'll give
Diffusion
some
and
perspective too. Sorry to interrupt. The one thought I'm having too with you saying that, I feel like there's something to denote too. Like, I'm going to be devil's advocate for OpenAI right now. I don't want us everyone to just feel like we're railing on them. We're like, we hate them, Sam, and all them are idiots. Like, don't get me wrong, they've built a couple $1 billion company. The
for
thing that
sure.
I think will be interesting to play out is if OpenAI with their government contracts, it's all about partnerships, right? Like
Hmm.
Claude Code was the first to integrate with Chrome and some of these other places. Google and Gemini had an advantage to begin with because they already own the Google metaverse, you could say. And the same with Mark Zuckerberg with his Meta. He's trying to use everything he already has and leverage it to like build his AI tool more powerful. So
Yeah.
I think, but that also goes to the niches, right? Like the government niche might help OpenAI with their valuation on the
Mhm.
positive, right? Like because Anthropic's not getting that funding.
No,
Even the president himself on a tweet, I love that he still does that. He was tweeting about Anthropic. I doubt he's, and this is my political opinion, right? I think there's some things where it's like it's just attention, it's media. They want to get you to like jaw drop. Oh
it's
no, like
clickbait.
it's a little dramatized, but it's like there's
Yeah.
obviously a reason they did not move forward with Anthropic. There's something to
Yeah.
be said there, but also there is a reason that you'd also don't want to be the open AI where you're just it's business just to do business, right? Like you
Yeah.
gotta make yourself respectable in your niche. You want to be the best in it. And don't get me wrong, like there's plenty of market share for everyone. That's why we have so many AIs. But you
Yeah.
definitely want to distinguish yourself with your credibility and what you are good at with. And I think OpenAI needs to figure out how they're going to get that valuation fully. But I think
No,
with that
yeah.
government contract, I think that is their most promising, in my opinion, promising outcome that they could start pivoting into or
Mhm.
designing things for the CIA, FBI, or to help with national security. That would be a major asset to OpenAI to integrate and adapt to. Because
Mhm.
you can't stay adapted to everything. You got to adapt
No.
to pick your climate, pick what you're going into, pick how you're going to enter this market. You can't just ride the wagon and the bus hoping you're going to get off at the right stop. You got to be intentional about where that is going, and especially the future of OpenAI. I think they're going to adopt some more intentionality, hopefully, by getting some
Mhm.
of this funding. That's my hope for them. I want to believe in them. I want to see them hit that right. Like that's everyone. We want to
Right.
see people, our friends succeed, and the things that bring us value. Like we get some brand equity in that. We're like, yeah, that company's doing some good stuff. Yeah, like
Right.
yeah, hell yeah, yeah. So anyway, not to derive or take away from what you're saying, but I
No.
think there's a good contrast we could look at as well.
I think there is, and I mean that is, at the end of the day, that is how software companies make money. That's why they're so valuable in this country is they have these long-term contracts that are very clear when it comes to revenue. I think we do need to do some geopolitical discounting for what happens at midterm and happens in 2 years, but I think they definitely have something there. I just don't know if it's worth 1.2 trillion. With that, everyone, we are going to start wrapping this up. James, I want to give you the last couple minutes to close us out. Say whatever you want. Feel free to plug anything. Take it away.
Yeah. No, thanks for having me, and I'll just speak about Tyler too.
Hmm.
I've known Tyler for a few years now, and we go back to the undergrad venture capital class, but he's always been somebody that's trying to innovate, be creative, so it makes me really happy to see that he's building out his own podcast and all these things, and I think he's a bright mind, and I've even joked with him. I was like, if someone doesn't take you in the future, you get stolen for some venture, some firm, I'm gonna steal you, dude. Like we're gonna do some consulting and still trying to get his full attention. He's doing a lot of good things. So I definitely think Tyler as a whole is focusing on some good centric impacts and has some good values. And obviously I'm one to talk. I share some of the same values, but
Right.
I think if you guys are listening to him, you're already plugged into a pretty strong he has a pretty good strong moral compass, I would say, as far as his values and where he's trying to learn and challenge things. He's not just trying to have a strong opinion. And I think that's something that sometimes I have really strong opinions, but obviously
Right.
that comes from just being really passionate about a field. You get very biased, you get very strong. So I think Tyler does a very good job of maintaining that as well. But yeah, and then on the other note, like Tyler said, I am in the state of Utah. I do a lot of research. If you guys are in other cities that you want to learn more about your cities, or I do take on different consulting projects, clients. Here's my little plug. I don't want to sell you something that's not of value. The whole point I would come in is more of just geopolitical analysis. I'm also, I can't speak on too many of my clients. I have a lot of NDAs, but I do a lot of different private contracts or municipalities that I'm starting to get intertwined with as far as data. And I want to build some RAG models as far as AI goes to help future generations of political decision makers make better decisions. And that's the whole derive from my game theory modeling and all these things. And I'm starting to integrate it in some places in Utah and get some traction with that. At the same time, I'm stuck in the corporate world doing some consulting for some other people just trying to make profits. So I do a lot of
Sure.
versatile consulting, and I'm always open to any opportunities, or even if you have mindsets or ideas that could challenge mine or add to mine, I'm more open than to any conversation that enhances my own or gives me new perspective. And I think that's another reason I love talking with Tyler so much is we we always challenge each other's thinking, or we'll talk more. So, but
Mhm.
thank you for this time, and
Yeah.
I love these conversations. So I'm sure you're going to keep doing great things, Tyler, with it. So thank you.
James Douglas, everybody, thank you for coming on the Wealth and Wisdom Show. Check him out. I will put his LinkedIn down in the bio. He also just started a Substack, or create an account. So see if you guys can bully him into doing some stuff here, joining our crazy little community. Last little piece of house cleaning. We still have spots open for the GrahamTracker private beta. If you would like to take advantage of that, please send me a message or click the link that will be in this description below. With that, thank you, everyone. Have a wonderful rest of your week. Bye, everybody.
Thanks.